Welcome back to my channel, everybody. Thanks for tuning in. So today I recorded my screens with my microphone connected for as long as I can, just trying to capture some live trades and some live commentary with my thought process for my entries and exits. I took two trades today. The first one was Microsoft, and I thought I had my screen recording, but it did not record any of the footage. So I do not have the Microsoft trade. I will break that down at the end of the video. But the second trade that I took was on the S&P 500, and I traded the micro E-mini, the future contracts. But in the case of this video, for educational purposes, you could trade any S&P 500 related instrument with the supply and demand strategy. You could trade SPY options, SPX options, or even the future contracts like I did. I tried breaking down the trade as best as I can while it was going on and while it was happening. So if you have any questions about my thought process, my entries, my exits, anything like that, feel free to message me on Instagram. I will link that in the description below. Definitely worth the follow. So without further ado, let's get into the first clip. So today's going to be a very interesting day, especially that last Thursday and Friday was a straight day down. It was very bloody, and just the sentiment was very bearish with the whole second wave of the coronavirus. We're opening up in the middle of no man's land. We have 2-hour demand at 29.18, and then we have 3-hour supply at 30.23. So in between two imbalances, we'll look for a move into 29.18 demand to get long, and we'll look for a relief bounce into 30.23 to get short. I do think I'm leaning more towards the long side today into this supply zone, and we're going to get a really nice rejection. You're going to get a lot of longs chasing it to the upside, and we're going to come into the supply and reject it for a nice sell-off towards the end of the day. Also have to keep in mind that we do have 1-hour supply from the overnight session at 29.80. So we could rally into this level, reject, and then come down for the higher zones. Now on the long side, we'll watch for this 2-hour zone at 29.18 if we want to sell off at the open to get long at, or if we do rally, I want to see 29.80 become, I want us to hold value and base inside this zone because that's very bullish if you agree on price inside of a supply or demand zone. So long side, we'll look to get long at 2-hour, or we'll look to get long at 1-hour supply after we move inside, hold value and base. If price just ignores this 1-hour zone, I will stay away from the long side and I will play the short side at 30.23, which is 3-hour supply. Next trade also is Microsoft. I like this long at 184. That is daily demand. We made a strong move past all-time highs, so I want this strength to continue. And I think 184 daily demand. We also have 4-hour demand at 183. So two levels very close to each other. I think we're going to bounce from this 4-hour demand zone. We're going to go lower and have a nice rally today to the upside off of this buy order imbalance. So I'm starting to like the S&P 500 to the long side. I just want to put this into a little bit of a perspective. So the past 3 days have been very bloody. They've been really straight shots down. So the sentiment is definitely bearish. So in my opinion, this rally this morning is a short covering rally. So for short covering rallies, for them to not sustain, we have to find value, because finding value is going to create new buying because you have buyers and sellers agreeing on price. And this so happens to be at this 1-hour supply that we are basing at and what seems to be finding value. So as long as we hold this 29.80 level, this is going to invalidate the short covering rally, which would not sustain because we are forming new value up near the highs. So this is definitely a watch to the long side, for the fact that 29.80 is holding, and for the fact that I'm speculating that new buying is going to form out of a base out of supply. All right, so I just got long 7 micro E-mini contracts at 29.87. I have my stop below 29.77, so about a 10-point risk. And I really do believe if we break high a day, we start forming value above the highs, this is going to invalidate a move to the downside, and we're going to have a nice trend day to the upside, because as value moves higher and as we break high of days, we have to have more attraction to market participants. And in my opinion, a break above 3,000 is definitely going to set that off. So let's see what happens. My stop is set below 29.77 for about a 10-point risk. So I just sold 75% of my position at 3,750, 3,007 and a half level. We made a nice push up. Again, broke high day. We held value. What I mean by holding value is that we spend time at a level. And when you spend time at a level, you have agreement between price, hence basing out, hence buyers and sellers agreeing on a price. So I'm out 75% of my position. We're at a whole 3,010. We're nearing it. So let's just see what happens with this. Like I said, there's nothing really stopping us from hitting 3,023, but I'm just going to take 75% of my position off the table, and now I'm going to raise my stop to 2,992 just to always protect myself so I can never let this trade ever turn red on me. So I just got long 5 more contracts at 3,001, and my stop now is going to be at 2,995. So what happened here is that this demand that formed above high a day, we pulled back into, also confluent with the supply zone, the top of the supply. So this level is a strong level with 2 different indicators telling me that I should get long with a very, very tight stop. Now, we broke above high a day, created value, creating new demand now, pulling back into the top of the supply zone, and we're about 20 points away from my target at 3,023. So I'm only in 5 other contracts now for a total of 7. And I plan on riding this. It's a tight stop, so about a 5-point or 7-point stop for a potential for 20 points to the upside. All right, I just sold at 3,016 and 3/4. I'm not going to get too greedy. We're 6 points away from the supply zone. But this basing candle on a 5-minute concerns me a little bit because this could be a start to a new supply zone. I'm not going to get too greedy. It was a perfect bounce off of 5-minute demand, perfect bounce at the top of supply after we held value. And the first entry of the first 7 contracts was also another perfect entry. So it's just about getting good entries and placing your stops accordingly and letting the trade ride. So I traded the E-mini, the micro contracts, for about $1,200 profit. So this is the Microsoft trade that I was talking about. We opened up and the first 5-minute period, we came into this daily demand. It did not give us a good entry. It would happen too fast, and it also happened at the opening bell. And I don't play the first 5 or 10-minute period after the market opens, just because you have a lot of adrenaline traders and the movement. There's no direction at the open because you have a lot of traders that are looking to buy and sell when there's no clear direction. So I usually wait for some type of direction. You could get long at this demand zone, but it's definitely much riskier than to wait for a direction to form and then not chase it also to the upside. So what I did was I saw it bounce off daily demand, and I wanted to get a pullback to get long into after we came up. So we got the pullback, and we actually formed a new 5-minute demand zone here. And I'm sure if you go to like a 15 or even a 10-minute chart, you would find a perfect basing candle. But this formed a new demand here. And then I chased it long as soon as we started coming up, testing high a day. I bought calls at, I think, 277. And then we broke above high a day. And what I did was my original stop was below the 185.44 level in this area. But then we broke high a day very aggressively. And I put my stop loss right where this white line is, just because we got that aggressive move. And I wanted to, or what I do is I always adjust my stop losses higher as the stock moves higher, just so I could protect myself if it does reverse on me fast. My target was the gap fill area, and that's exactly where we did stall out at. I don't want to call this a rejection because we stood in a tight channel after that, but I did get out after this gap fill because of a gap down on Microsoft. Usually gap downs will reverse into a gap fill, and we actually held value at the gap fill. We were traded sideways, consolidated in a nice tight channel. So I wish I did not exit at the gap fill, or at least I scaled out. I wish I did. I could have scaled out half my position, put my half below the stop loss, and I still would have been in this trade theoretically, in hindsight, I guess, for another leg higher. But I did protect myself and sold my full position once we did gap fill. So this was a good trade. I sold at, I think, 355. So 277 to 355, it's not bad. Could have been much more if I scaled out and adjusted to my proper stop loss plan. But I'm not going to complain about that, and I'm also not going to complain about the S&P trade today.